When it comes to Tesla's 5-year price target, the key factor is its autonomous taxi platform. Robotaxis operate under a software-as-a-service model, and this shift could transform Tesla's financial outlook. Currently, Tesla's auto gross margins sit around 16%, but in the SaaS world, margins can reach 80%. Autonomous mobility is the largest AI project on Earth, and its adoption could happen faster than expected. Over the past decade, Tesla has steadily improved its full self-driving system. Safety data is becoming more compelling. In the United States, an average car gets into an accident every 200,000 miles. A Tesla with just autopilot improves that figure to 600,000 miles, and with an older version of full self-driving, it jumps to 3.2 million miles. Many compare this transition to the early days of railroads or electricity, where numerous companies emerged, but only a few dominated. Elon Musk himself has pointed out the 4 major players in this space, reinforcing the idea that Tesla is uniquely positioned for success. Unlike the railroad industry, which expanded region by region, autonomous mobility is a global revolution happening all at once. The pace of development is accelerating. Tesla's revenue is growing at an extraordinary rate. Forecasts suggest it will reach $11 billion next year and $26 billion the year after. With this trajectory, Tesla is scaling into profitability faster than many anticipated. One of the biggest advantages Tesla holds is its leadership. As companies transition from startup to large-scale operations, management teams must evolve. Tesla continues to bring in top talent while retaining key figures, ensuring that it remains at the forefront of both electric vehicles and autonomous technology. Elon Musk's impact extends beyond Tesla itself. His ability to think from first principles, rethinking industries from the ground up, has been pivotal. He revolutionized the auto industry, and now it's transitioning into the autonomous industry. His influence will also shape future innovations from artificial intelligence to space exploration. Tesla's growth provides confidence to long-term investors. The company's research into autonomous mobility has been extensive, and as more analysts begin to model what an autonomous taxi network means for Tesla's business, expectations will likely shift. Unlike traditional automakers that rely on lower-margin vehicle sales, Tesla's robotaxi network represents a high-margin software-driven opportunity, similar to a SaaS model. This could significantly alter its revenue structure. Analysts have often been skeptical of Musk's ambitious timelines for autonomy, but the recent developments in artificial intelligence and self-driving technology are forcing a reassessment. Tesla is positioning itself to capture a significant share of this market, and as adoption accelerates, the financial impact could be massive. The robotaxi market alone is estimated to be worth between $4 to $5 trillion in revenue within the next 5 to 10 years. If Tesla dominates this space, its revenue opportunity could exceed $1 trillion in the next 5 years. Tesla remains the largest position in the flagship investment strategy. While the stock's volatility makes risk management crucial, its long-term potential justifies the exposure. Tesla's holdings have appreciated significantly, reaching around 15% of the portfolio. Investors monitor these levels closely, making slight adjustments while allowing the stock to run. Price targets for Tesla continue to reflect its potential. The 5-year forecast suggests a value of $2,600 per share. The probability of reaching this target has increased due to favorable regulatory conditions and Tesla's ongoing advancements in full self-driving. Autonomous vehicles are rapidly approaching a level of safety that surpasses human-driven cars, and regulatory support is likely to follow. Tesla's Cybercab event and recent earnings report have forced analysts to reconsider the company's future. Many now recognize that Tesla is not just a car manufacturer, but a software company with vastly different margins. While traditional EV sales carry margins in the 20 to 30% range, a robotaxi network could achieve margins closer to 80 to 90%. This completely changes Tesla's valuation model. Alphabet's Waymo has already demonstrated that autonomy is viable, proving that the technology is not some distant future concept, but a reality today. Tesla is expected to take this to the next level, bringing self-driving technology to mass adoption. Several recent developments have further strengthened confidence in Tesla. General Motors and Ford have scaled back their EV plans, signaling that Tesla is set to gain even more market share. GM has also shut down its autonomous division Cruise, adding to Tesla's advantage in the self-driving race. Tesla is focused on maximizing vehicle production because each car represents a potential robotaxi unit. The shift toward autonomy means that every Tesla sold today carries future revenue potential far beyond its initial sale price. This optionality is why Tesla's long-term growth strategy is centered on scaling production. The stock's expected value for 2027 is projected at around $2,000 per share, with a range between $1,400 and $2,500. Regulatory tailwinds are also working in Tesla's favor. Auto fatalities in the United States have been declining for decades, but in the past 5 years, they have risen to over 45,000 per year. This puts pressure on regulators to adopt safer technologies, and Tesla's data proves that its full self-driving system significantly reduces accidents. Tesla believes the global robotaxi market could generate between $8 and $10 trillion in revenue by 2030. This is one of the most significant investment opportunities of this generation. Beyond financial gains, autonomy could also save millions of lives by eliminating human error, which accounts for 80 to 90% of auto fatalities. If Tesla executes its vision, the impact will be transformative. Any short-term setbacks could present a rare buying opportunity. The stock's valuation multiple is now in line with broader market levels, making it one of the most attractive plays in the AI-driven mobility sector. Elon Musk remains a crucial figure in Tesla's future. While the electric vehicle business is on autopilot, so to speak, autonomy is where his leadership will be most impactful. This is why Tesla's long-term price target of $2,600 per share remains intact. Advancements in artificial intelligence have dramatically improved the probability of achieving autonomy, making Tesla's vision more viable than ever. The first company to establish a fully operational autonomous taxi network will likely dominate the market. This is a winner-takes-most scenario, and Tesla is in the lead. Autonomous mobility brings together multiple technological platforms, robotics, energy storage, and artificial intelligence, creating an ecosystem with explosive growth potential. Many still underestimate Tesla's role as the largest AI project on Earth. The industry is on the verge of massive expansion, with global revenue from autonomous mobility expected to reach $8 to $10 trillion over the next decade. Taxi platforms alone could capture half of that market, and Tesla is positioned to be one of the primary beneficiaries.